Welcome back. Today we're digging deep into this huge stack of research you sent over about the AI boom.
Yeah, there's a lot out there. Definitely. We want to cut through all the noise, the hype, the buzzwords, and really find where the tangible money is actually being spent right now. I mean, the market's just flooded with AI stuff, but our mission is super focused.
Hypergrowth.
Right, and hypergrowth is the key word here. We're not just looking for companies doing, okay, we're targeting the ones with revenue rates smashing past 40%
Right.
year over year.
Yeah, that kind of acceleration. That's what the big institutional investors are really chasing. And based on the data, two companies really jump out as fundamentally reshaping the AI supply chain.
Mhm.
Palantir Technologies and Applied Digital. And what's so interesting is how they're at like completely different ends of the AI spectrum, right?
Sure.
You got one that's pure software intelligence, high margin stuff, and the other is, well, the heavy lifting, the physical infrastructure, the raw power needed to even run that intelligence.
That's the core contrast we need to explore. We're going to unpack how Palantir built this specialized data architecture to sell its complex software to businesses.
Okay.
And at the same time, how Applied Digital is leveraging its background, its expertise in getting massive amounts of power to build, well, the data centers of the future.
Now let's kick off with Palantir, ticker PLTR. The
Yes.
numbers you highlighted show this incredible acceleration. What's the single most eye-popping metric right now defining this hypergrowth phase for them?
I think it has to be the consistency of that acceleration. Palantir's revenue growth, it's actually increased for 8 straight quarters.
8.
8 consecutive quarters. And it culminated in a soaring 48% year-over-year revenue jump in the last reported quarter. This isn't just, one lucky quarter. It's a real sustained shift in their trajectory.
Okay, so to really get that surge, we probably need to look back a bit.
Yeah.
Palantir didn't start as this commercial powerhouse, did they?
Not at all. They began primarily as a very specialized contractor for the U.S. government, doing deep data gathering analytics. Really mission-critical stuff like tracking threats or managing huge global data efforts. Think early phases of the COVID-19 response.
Right. That background must have given them amazing credibility.
Incredible credibility, yeah. But it also sort of capped their growth potential. Government contracting, while it pays well, it's cyclical. So as the pandemic response wound down and those big mission-critical projects started to stabilize, the market started seeing maybe slower growth ahead for them.
So that forced their hand. That became the big inflection point.
Absolutely. They had to pivot away from just being seen as, the government's go-to data consultant.
Oh, right.
And they executed this massive strategic pivot by introducing the Artificial Intelligence Platform, or AIP. That changed basically everything.
Okay.
It just repositioned Palantir completely. Suddenly, they were a crucial commercial AI player, offering tools not just for governments anymore, but for global corporations that are just drowning in their own data. It was a tough transition, definitely required aggressive marketing, restructuring, but the numbers show it really paid off.
And the success of that commercial pivot is, well, pretty undeniable looking at the data. If we drill down into those key growth numbers, their U.S. commercial revenues surged 93% year over year last quarter.
93%.
That's almost double their core commercial base in a year. Plus, their customer count climbed 43%. I mean, they're clearly penetrating the market fast.
Yeah, and what's really fascinating here is that the growth isn't just because, everyone wants AI now. It's because Palantir found a way to make AI actually work in these really messy, complex corporate environments.
Okay, that brings us right to the tech question. What is the secret sauce of AIP? Why are companies willing to pay such a premium for this specific platform?
Well, Palantir had this key insight. They realized the world probably didn't need another large language model, another LLM. We have, quite a few good ones now.
Right.
What the world was missing was an AI operating system, and that's really what AIP is. They decided, okay, we're not going to build the next big engine. Instead, we'll build the perfect road for any engine to run on. They focused on the workflow, the application layers, the stuff that makes these existing models genuinely useful in a business context.
So they're like the essential translator, the middle layer. How does AIP actually build that perfect road when most company data is, frankly, a chaotic mess, siloed everywhere?
It's through the really unique approach to organizing data. They call it an ontology. AIP takes in all of customers' raw data, everything, spreadsheets, sensor feeds from manufacturing, you name it, and it maps it all out. Think of the ontology as like a super comprehensive digital twin of the entire business. It maps every single piece of data to real-world assets, to relationships between things, to actual operational workflows. That's a great way to put it. And for you listening, here's why that careful organization is so crucial. You hear everyone talking about AI hallucinations, right?
Yeah.
Where the model just makes stuff up but sounds confident.
Exactly.
And hallucinations often happen because the AI is fed bad data or disconnected data.
Cool.
This clean, robust, constantly updated ontology that Palantir builds, it drastically cuts down the chance of those errors.
Oh, okay.
It lets those third-party LLMs work off a verified source of truth so they can deliver insights that are actually actionable, that can solve, billion-dollar operational problems in real time.
Right. This capability logically leads us straight into the maybe slightly uncomfortable topic of valuation. Because of this huge potential and the early success, the market's given Palantir a truly eye-watering valuation. We're talking a forward price-to-sales ratio of 80 times based on 2026 analyst estimates. That number is just steep.
Yeah.
Almost breathtakingly so.
It is an extreme valuation, no doubt about it. It reflects this massive expectation of, well, phenomenal future growth. The market is essentially pricing in, like, the next 5 years of commercial acceleration, but doing it today.
Okay, but let's be critical here. What actually needs to happen? What level of acceleration or market capture for 80 times PS to even remotely make sense? It feels like a huge risk.
Well, it implies a few things. It implies first that Palantir has to successfully onboard hundreds, maybe even thousands of major global enterprises onto AIP.
Okay.
And second, it assumes that the competition, the big cloud players, other software companies, basically fail to replicate the complexity and effectiveness of Palantir's ontology approach.
Let's push on that competition point a bit. If Palantir's software layer is so critical, why hasn't a giant like Amazon or Google just, built their own maybe better ontology system? What are the real barriers to entry keeping them out?
Well, I think the barrier isn't just writing the code. It's really about the decades of very specialized experience they have integrating into highly complex, often highly secure, mission-critical operations, especially for governments.
Ah, that trust factor.
Yeah.
Exactly. That kind of deep integration, that rigor, that trust.
Yeah.
It's really hard to replicate quickly, especially in sensitive industries. Plus, their financial structure supports this premium pricing. Get this. Palantir's gross margin is 80.03%. 80%.
Yeah, that is the absolute signature of a high-end, incredibly scalable software-as-a-service SaaS model where, the cost of serving one additional customer is almost nothing. That kind of margin definitely makes sense for a software intelligence layer. Okay, now let's pivot completely. Let's talk about the physical foundation, the bedrock of this AI boom. Applied Digital, ticker APLD. You just can't run that 80% margin software without incredibly powerful, robust physical infrastructure underneath it.
Right. And Applied Digital is a totally different investment idea. It focuses squarely on the biggest and I think maybe most overlooked bottleneck in the current AI infrastructure build-out. Okay, and we hear so much about chip shortages, NVIDIA GPUs being scarce. So I'm guessing the bottleneck isn't the chips anymore.
Surprisingly, no. It's not really the chips, not primarily. The constraint is increasingly about access. Access to cheap, stable, and just massive amounts of power. Training these modern AI models, especially the huge foundational ones, and then running them, it just consumes energy on a scale data centers have never really seen before.
And what's really interesting about APLD is their backstory, right? They weren't always an AI infrastructure company.
That's exactly right. Applied Digital actually grew out of its original identity as a Bitcoin miner.
Okay. And that history gave them this critical, almost unreplicable head start. They had already secured access to utility-scale amounts of cheap, reliable power infrastructure, often in places with favorable regulations for large power consumers. They basically pivoted from mining digital gold to powering digital intelligence. So today, APLD isn't just building like generic server farms. They're constructing highly specialized facilities just for AI workloads.
Precisely. They design and operate data centers specifically engineered for the incredibly high heat loads and power density demands that come with training large AI models and also for running inference.
Okay, let's pause on inference for a sec. We've mentioned it a couple of times. For you listening, what exactly does inference mean in this whole AI picture?
Sure. So training is like teaching the AI model everything it knows, feeding it massive data sets. Inference is when you actually use that trained model out in the real world.
Okay.
It's the real-time running of the deployed AI. Think image recognition, automated customer service bots, or even running Palantir's complex applications on top of that data ontology we talked about. Inference still needs significant compute power, and APLD is building facilities optimized for both training and inference.
Got it. Okay, so let's break down their current business model.
Yeah.
How are they actually making money from this huge power advantage they have?
Well, they basically have two main services right now. The first is colocation. This is where they lease out the physical data center space. And crucially, that essential power access to big companies that already own massive stacks of their own GPUs.
So the customer brings the expensive chips.
Right. The client brings their own hardware, but APLD provides the building, the cooling, the security, and most importantly, that enormous connection to the power grid.
And the contracts here are just huge, right? We're talking about cloud companies like CoreWeave signing deals worth over $11 billion to lease APLD's facilities.
$11 billion. Yeah, that's not some small pilot project. That's basically a decade-long commitment to using their infrastructure. It really signals how desperate the industry is for these ready-to-go high-power data centers.
Okay, so that's colocation. What's the second service?
The second service is GPU rentals. In this model, APLD actually owns the specialized AI hardware themselves and rents it out directly to customers. This is for companies that maybe prefer an operational expense paying monthly rather than spending millions or billions upfront on hardware. They're essentially offering AI compute power as a service.
Okay, that makes sense. And their growth rate seems to reflect this huge demand. Applied Digital's revenue surged an incredible 84% year over year last quarter, hitting $64.2 million.
84%, yeah.
But given the scale of those $11 billion contracts you just mentioned, that $64 million quarterly revenue almost seems like just the very beginning, like the first drops of rain before a storm.
It is absolutely just the tip of the iceberg, and their expansion plans really demonstrate that. They're planning for a scale that you usually only associate with actual utility companies.
You mentioned gigawatts before. That's a term normally used for like entire power grids, not single companies building data centers. Are we really saying APLD is positioning itself to become almost like an AI power utility?
In many ways, yes. Their first major campus, Polaris Forge 1, it's already operational. And they expect it to surpass 1 gigawatt of power capacity sometime between 2028 and 2030.
Oh, 1 gigawatt. Wow.
And they've already broken ground on Polaris Forge 2, which they expect to bring online in late 2026. On top of that, they're smart. They're leveraging their execution skills by partnering with other companies, third parties who might have access to large power contracts but don't have the specific expertise to design and build these complex, high-density data centers. They have a pipeline of potentially 4 more gigawatts of power coming from these kinds of third-party collaborations.
4 gigawatts in the pipeline. That kind of scaling starts to make sense when you hear the forecast from folks like NVIDIA's management. They're predicting the total AI data center market could swell to somewhere between $3 trillion and $4 trillion by the end of this decade.
Trillion, with a T.
It's just an enormous market size. And APLD seems positioned right at the foundational layer, capturing that essential cost element, the power and space needed for all that growth.
The potential upside is definitely clear. But we absolutely need to circle back to that financial contrast with Palantir. If Palantir's 80% gross margin screams premium software, Applied Digital's gross margin is currently around 14.46%.
Okay, 14.5% versus 80%. That's a huge difference. Why does that lower margin matter so much for investors thinking about APLD?
Well, it reflects the reality of their business. It reflects the incredibly high capital expenditure, the CapEx, and the significant ongoing operating costs, mostly for power, that are required to build and maintain gigawatt-scale data center facilities.
Right. Building things costs money.
A lot of money. APLD operates much more like a utility or maybe a heavy industrial company. It's a cost-heavy model. They have to continuously invest billions in physical steel and concrete and cooling systems before they see the revenue return from those multi-billion-dollar contracts.
Okay, so Palantir, the high-margin SaaS company, has almost zero cost to add another software user. But Applied Digital, the high CapEx infrastructure player, has massive scaling costs for every new megawatt they bring online.
Exactly. And that fundamentally defines the different risk-reward profiles of investing in these two parts of the AI supply chain.
So let's try to synthesize what we've really dug into today.
Yeah.
We have Palantir representing the high-margin, software-based workflow intelligence layer. Its sky-high valuation implies the market expects near-perfect execution in scaling that software commercially. And then we have Applied Digital, providing the essential infrastructure muscle, the critical, power-intensive physical foundation. They're scaling up massively, backed by huge, concrete, billion-dollar contracts, but operating on much thinner margins. Both, crucially, are achieving verifiable, actual hypergrowth right now.
Yeah, that's the setup. Which leaves us with maybe one final provocative thought for you, the listener, to mull over as you process all this.
Right.
Considering the truly immense predicted size of that AI data center market, that $3 trillion to $4 trillion number,
Yeah.
which part of this AI supply chain do you ultimately think presents the most compelling long-term upside? Is it the high margin, potentially very sticky software layer focused on making AI smarter and less error prone like Palantir? Or
Hmm.
is it the power intensive, absolutely foundational infrastructure layer scaling to gigawatt levels and priced almost like an essential, unavoidable utility like Applied Digital? It's really two very different roads to hypergrowth within the same massive technological revolution.